This video will give examples of careers in precious metals using statistical analysis, finance, accounting, and business. Metal exchanges provide liquidity for an efficient system of precious metal pricing. Liquidity means that there is a high level of volume, so it is easy to buy and sell. The metal exchanges work like stock exchanges and give simultaneous access to transactions for thousands of buyers and sellers worldwide. There are two basic types of markets or exchanges for precious metals. The first is the over-the-counter or spot market, where lots of physical metal are bought and sold. The second is the futures market, where contracts for lots of precious metal for future delivery on a specific date are bought and sold. A lot is a specific quantity of bullion which is specified to strict purity standards and regulations. Bullion is the term for precious metal bars or ingots, which are valued solely based on the weight of the specific precious metal like gold or silver. We will review these markets along with defining a number of terms used to help understand this critical part of the precious metals world. The classic buying and selling of commodities is an ongoing auction in the over-the-counter markets around the world. Precious metals are traded instantaneously and electronically in major exchanges in New York, London, Hong Kong, Mumbai, and elsewhere. Like the trading of stocks, there are bid and ask prices, which are continually changing. The spread is the difference between the bid and ask prices. The spot price is the price at a specific moment in time. This is used to follow the price of precious metals throughout the trading day. It is quoted, charted, and tracked throughout the day and used as an instantaneous benchmark price point for transactions. Buyers and sellers can use this benchmark to help price small transactions like purchasing precious metal coins, for example. Precious metal spot prices are constantly changing, whereas recognized benchmark prices are created by independent administrators at a set time or times each day. These benchmark prices are referred to as auction prices, as they represent a snapshot in time of the specific metal's spot price. For example, the internationally recognized London Bullion Market Association lists the LBMA gold price auction each business day at 10:30 a.m. and 3 p.m. London time. They are commonly referred to as the London AM and PM gold prices. The LBMA also lists the platinum and palladium AM and PM benchmark prices, whereas the silver price is listed only once a day at noon London time. These benchmark prices are referenced in commercial contracts and used to price precious metal containing products and chemicals. They are also used for inventory valuation purposes in accounting systems by companies that have precious metals contained in their inventories. The other precious metals, rhodium, iridium, ruthenium, and osmium, are not traded on the open exchanges as they are of much smaller volume production and usage. Their prices are dictated by commercial activities of some of the large primary refining companies like Johnson Matthey, BASF, Heraeus, Umicore, and Tanaka, who produce these metals as part of their platinum group metal refining processes. This rarer group of precious metals is much less liquid in a financial sense, as there is not an open exchange to easily buy and sell them. There is not enough volume or flow of these metals to justify an official exchange at this time. The smaller volume of these metals has also made them much more susceptible to extreme price swings with changes in supply and demand. When a company purchases precious metals to incorporate into their products, it is called going long or having a position. It becomes part of their inventory and they have the risk or exposure of the price going down and losing money by the time they are done processing it for sale. They can manage this risk through a process called hedging, using forward contracts or future options. This will be presented in our next video. The International Precious Metals Institute promotes the education and advancement of precious metals technology and business. IPMI is an international association of companies committed to providing technical resources and educational materials, including a series of videos presenting examples of precious metal applications and a variety of interesting and rewarding career opportunities.